Welcome to the broadcast, sir. First up, what are the main reasons for the fluctuations in the previous week?
So I think a number of factors. I think the biggest factor for last week was obviously the Federal Reserve, and whilst they kind of cut interest rates by quarter of a percentage point, which is well expected, it was a hawkish commentary that came out, from the Federal Reserve Chairman Powell, really saying that they're going to go back to targeting inflation, which was, I think, a surprise for the market. I think the underlying message is that whilst those figures on Friday were not so bad in terms of inflation, I think it's priming us for less rate cuts, because he feels that President-elect Trump and some of his policies might be inflationary initially. So I think that was the kind of hidden message, is that don't expect interest rates to fall down so quickly now, because there could be some changes in how the economy faces up to sort of Donald Trump's policies and maybe potential tariffs. So I think that was the message, and the market didn't like it.
Right, Mr. Holland, Indian stocks are down almost 10% from their recent highs. Should investors expect more pain ahead?
I think investors should expect more volatility, because now it's towards the back end of the year, so maybe foreign investors will be less active. But going into January, there's so many moving parts. We got the earnings results here in India starting, and I expect those to be followed by more downgrades. Then, of course, we've got President-elect Trump on the 20th, taking over the administration. So I think for investors, I think just sitting on the sidelines for the next 1 month is probably not a bad strategy. Hold some cash and just wait to see what some of these policies might be and how it affects emerging markets. Because whatever we're seeing at the moment, it's meaning that the dollar's strong, which is never good for emerging markets of metals. So that's the kind of backdrop you have. I think the only one key positive I can think of at the moment for India is maybe some kind of optimism towards the budget in early February. But I think January could be a very volatile month.
Just to follow up on that, do you see emerging markets like India sliding further now that the Fed foresees just 2 rate cuts in 2025? Right, Mr. Holland, if you can hear me, just to follow.
Yes, sorry.
Right, just to follow up on that question. Do you see emerging markets like India sliding further now that the Fed foresees just 2 rate cuts in 2025?
I mean, the 2 rate cuts in 2025 is a disappointment, and already there's some commentary out there saying that potentially there might not be any rate cuts. So where does that leave the Reserve Bank of India, when they come to meet in February? I think probably 25 basis points could be on the table. But what I do feel is that, for India, we're facing this slowdown in GDP growth, and we're not seeing the government pick up spending, and neither the private capex. Interestingly, there's I think a Siemens analyst meeting on Friday, of which the company mentioned that they're seeing a slowdown, which is why you saw all the capital goods stocks fall quite sharply on Friday. So I think the earnings downgrades will probably mean that the market, if we're going to be in a range, it's on Nifty, it's going to be around that 23,000 to 25,000. There's no particular catalyst now for the markets to move significantly higher, particularly in the next few months. So I think it's going to be a tricky time, and it's going to be a volatile time. So I think pick out your sectors that you like for the long term, and those are the ones you keep investing in.
My last question to Mr. Holland, what is your bull case and bear case target for the Nifty for 2025?
My bull case would be, I'm thinking that earnings might grow by 10%. So if that was the case, then a 10% upside from here in terms of the Nifty index. But I think I might be optimistic. So I think at best, if we could hold around these levels for most of 2025, I don't think that would be a bad outcome for the markets.
Thank you, Mr. Holland, for joining us on World Business Watch with your insights.
Thank you.